Hey, good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Thursday, March 27th. We got quite a few economic news releases, or actually about 3 economic news releases, but they are high impact today. So we'll start right off with the weekly jobless claims. So last week we had 321,000 people applying for unemployment, and the forecast for this week was supposed to keep in that same range of 320. And it dropped down to 311,000. So this is obviously very good news that fewer people are applying for unemployment. This is the lowest we've had actually in about 4 months. So good news here. This is creating some optimism that maybe more jobs are being created and the job market will start taking off a little bit more than what it has been. We also got the final revision of the GDP for the fourth quarter, and we started off with last month with their second revision at 2.4. So the forecast is supposed to jump up to 2.8%. It did go up, but not as high as forecast. So so the final for the fourth quarter came in at 2.6. A lot of this has to do with it's being attributed towards the higher healthcare costs that are being out there that are being applied towards the GDP. So unfortunately, that means more money out of our pockets towards healthcare. And last but not least, we got the pending home sales for the month of February. So we had a negative in January, a negative 0.2% from the previous month of pending home sales, and for the February came in at negative 0.8. Now a lot of this is being attributed towards the weather, the low inventory, maybe the rates going up a little bit, but they are kind of hopeful that NAR is seeing some data that more buyers are popping up or shopping out there, and some of this may change a little bit, but it does something they have to kind of keep an eye on, that maybe we will see a slowdown a little bit. Maybe we might get more of a norm, but this is also, of course, we have to look at geographically speaking. Some areas are doing better than other areas, so some areas are up and some areas are down. So we just got to take that into consideration, that everybody's communities will be a little bit different in these terms. So let's jump over to the headline news here, and the stock market, it was currently down when we look at it. It's been kind of going back and forth in positive and negative territory, so it's not trading high or low on there. So, but part of it is earnings reports coming out as well. We did have those kind of priced in. There's also, of course, the talk about Europe, maybe where the U.S. is maybe talking about going. Maybe scaling back on they're scaling back on their by tapering on the quantitative easing and possibly raising short-term interest rates next year. Whereas you get places like Europe where they are looking at maybe creating stimulus to fight off maybe possible deflation. So they have their concerns, and they're going a lot slower than where the U.S. is currently at, or where it looks like the U.S. is moving towards. And then also today they could change the markets. We got several members of the Fed members that are going to be speaking today, so comments that they make, of course, could be taken into context and perhaps make a big influence of where the markets go today. All right, so let's go ahead and take a look at what interest rates are doing today. As you see, we had a nice little rally today. It brought us up above the 10-day moving average. We did start the day off about 9 basis points lower, and we have kind of like a star effect, so it's kind of deciding as to which way it's going. So right now it's kind of resting at the 100-day moving average, but above the 10-day moving average. So, but it doesn't mean that we're down, the interest rates are more, because it's only about, right now we're about 6 basis points from where we left off yesterday. Typically we need at least 12 basis points or more for really to be a price change in there. So we're about where we left off yesterday. So pricing wise, interest rates are about the same as where we left off yesterday. We are showing some improvement, especially after the Fed, as you can see that huge long red line from last week after the Fed announced that hinted towards possibly raising short-term interest rates. Both markets had tanked, and we've been slowly kind of climbing our way back up to those same levels. All right, folks, so today, right now, so far we have, again, the same interest rates are where we left off yesterday. Probably would be maintaining this type of level. I wouldn't expect to see huge changes today, unless the Fed members, of course, say something and they kind of react to it. Thanks for watching. I hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow.